All right, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 3rd. Mike Boutros with you on the horn. Good morning, Jay, Kay, everyone in the room. It's been an interesting start to the week and month. Now, we were looking for the dollar pullback. It's materialized. It came into the first area of support. We're seeing a bit of a bounce, and you have a lot of event risk on tap over the next 72 hours. We got RBA last night, not much. We'll look at those levels. We got the BOE on tap tomorrow, CAD balance of trade information tomorrow as well. Then heading into, or I'm sorry, on Thursday, then heading into the close of the week, we get the employment data from Canada and non-farm payrolls at the same time. So lots to look at on the menu for today. DXY, Euro, Dollar CAD, Aussie, Gold, Silver, and oil. We do have employment data from New Zealand on tonight. I don't really like the Kiwi levels, but we'll take a look at those as well, just where those are trading before. And obviously the BOE on Thursday, we'll take a look at what pound is doing. As always, any other questions or trade setups, feel free to throw them on the message board at any time. Let's jump right in. So right off the bat, DXY, here's what it looked like into the start of the week. Okay, the basic premise last week was that we came off of the high week close of the year. Failure there. We got a decent pullback last week. Even the wave count structure, again, suggests we should be looking for corrective price action off the high. And we've basically been looking at this pivot at 91.75, right? It's the 52-week moving average. It's the swing lows that we made in August of last year, so some nice symmetry there. And that's offering a near-term support. On a weekly basis, if we were to close below this, it would suggest you got a bigger spill down in the US dollar. But all things held constant, the focus right now is what we do around here. Okay, again, that's what it looked like in the beginning of the week. The daily chart into the start of the week showed that 38.2 being the floor. There's 92 resistance. There's the monthly open at 92.38. Any recoveries should be failing here, as we noted, for a move lower. 91.50 would be that low that we swung in back in June. Here's what it looks like now on the daily chart. So there's the bounce. There's the rebound. 2 days later, guys, failure again. Multiple attempts to push and close above the low close from back here in the July opening range. Couldn't do it. Here's a second day. So again, all things held constant, it's a real tight monthly opening range. I'll drop the monthly marker here tomorrow once we get another bar here, but really tight monthly opening range taking shape right above Fibonacci support. Here's what the scalp looked like right into the start of the week. We had already made that rebound off that 38.2 last Friday. And we were talking about, we kind of closed mid-range. So again, rallies should be exhausting off of one of these two levels to see if we can't get that move lower. Kind of been in no man's land this week so far. Here's what it looks like. No change to any of the levels. Okay, here's where we opened the week. Didn't get much of a pop. It literally popped just to Friday's high and failed there. And we've been meandering lower ever since. Look, we could still get that correction before the ultimate move. It's a tight weekly opening range. You have a lot of event risk on tap. Like I said, the big player is really going to be non-farm payroll. Expectations are for a print of 880. That's toned higher. The expectation was somewhere in the round of 800. Now we're looking at 880. Unemployment's expected to fall to 5.7%. Again, as I always say, we'll take a look at the labor force participation to see how that impacts it. But certainly the dollar levels, not much Momo here. Momentum is kind of flatlining. Really well-defined levels, but you're right in the middle of the range. So there's not been much to write home about for the DXY. On the lateral side, if you take a look at what that means for Euro, here's what Euro looked like into the start of the week. Similar scenario. This thing had exhausted into major resistance. First of all, on the weekly chart, the median line for the current operative formation that we're in. On the daily chart, here's the objective July range highs. And we're just pushing it, right? So we got that near-term consolidation breakout last week. Great, ran into last month's high, failed there. And we're just in a really tight range right below. So what does that mean for us on the intraday? Here's what it looks like. Haven't taken anything on this. I know that on the swing side, we're still involved here, and I don't think there's anything to upset that, but getting a little bit of a kind of just sideways contraction pump action. If we get that last surge, there's 1950, 1945, I think is where Jamie has the limit on that one. But the weekly opening range is really well preserved below last month's high. So your objective July opening range high is still kind of governing the upside here. Near-term support 1856, 1850. Bullish invalidation down to 1813. I don't think we get down there, but that's the level. If we were to correct lower or we were to break lower this week, still would look for a reaction here. Our ultimate guide or ultimate goal here is to get that stretch near 1948, 1950. So kind of boring. Kind of been waiting for this thing to give us some clarity. Euro and DXY, both of them just kind of getting tired here. Think you get some more sideways price action, but lots of event risk on the tap this week. Hopefully we'll get the kick. All right, so that's DXY and Euro. We kind of flew through those today. They're not much to update on. Dollar CAD is looking quite interesting. And here was our last update on dollar CAD as we opened up the week. You know, this thing has kind of been, what do I want to say on this? It's been too clean for comfort. Here's dollar CAD on the weekly chart. We came off of big resistance. I went over this in the webinar yesterday. I don't think I have to go into detail again, but we came off of big resistance. We pushed and closed last week right at that slope. So it's kind of been like a no man's land. Ideal scenario, again, my humble opinion, you get a little bit of a pump fake here. Again, 26.34, 26 offers some resistance for that stretch lower, and then we look to reassert. All things held constant, I do think it's still tired, right? The rally off of major support is tired. You saw a rally of more than 6.6%. Haven't even made a 50 yet of that stretch. So that's been kind of the idea here with Looney. Now look, on Friday for this one, you got big event risk. You got U.S. non-farm payrolls and CAD employment at the same time. Canadian employment numbers are expected to show a gain of 177,000. Unemployment is expected to drop to 7.4 from 7.8. So a high expectation there. But nonetheless, could fuel a nice move here in dollar CAD. Look, all things held constant. This thing completed a 618 extension from the decline off the high. Here's the rebound, and the focus is on how deep this recovery gets. If that was the low, right, it's the break above the median line here that would mark resumption. My humble opinion, I'm still of the mindset that we need to make another stretch. So I'm looking for exhaustion, okay, on the top side here. Here's what the near-term chart looks like in dollar CAD. And here's what it looked like last or into the open of Sunday. So again, ideal scenario, as we noted, 38.2, maybe a 50 stretch to fade it for that last drop towards the March low. So here's the open of the week. Pause at that 236, 38.2 combo, kind of a little bit of a pivot there. We just bounced off it. So maybe we do get to 38.2. Don't know if we get to 50, but the idea is to look for exhaustion here. It's a possible fake, right? I know Jamie's looking for like 25.30s, 25.50s, which is basically a little bit higher than where we are right now. 25.30s right here. I got 25.70 as the 38.2 the drop. Be really, really nice. So possible exhaustion on the long side. If you get really granular in this on the near-term approach, you do have some slope, which is giving us some sort of indication on timing here. And again, would bring to focus that 50 basically later today into tomorrow. Weekly open support. Oop. So that would be sort of your near-term bullish inval. If we break below that, look for resumption. Dollar CAD. Any questions on Looney? Okay. On Thursday, by the way, you did get balance of trade data from Canada as well. So keep that in mind, something before those employment numbers. All right, Aussie dollar. Here's what Aussie looks like. So on our last update for Aussie, and this one's been an interesting one as well. The RBA didn't give us much last night, but I did want to take a look at it as we were heading into the release. The major focus, before we jump into the intraday, here's the weekly. I can't stress this chart enough. I've been madly in love with this chart for the last couple of weeks because I've been wanting to see what reaction we get at this critical juncture. Okay, so once again, y'all have seen this chart before. Downslope support. You got a sliding parallel there extending off the February lows. You got the swing lows from May of 2017. Support, beautiful pivot, resistance, breakout. We're now there. And the whole focus for the last 3 weeks has been, what is Aussie dollar going to do at this critical support? If we break lower, there's really nothing until like 71.20s. So it's a major, major, major inflection zone, okay? And we're looking for a reaction here this week. Now, again, I was hoping the RBA would do something. They didn't give us much. I just wanted to highlight this on the daily chart before we get into the scalp. Basic resistance into the 74 handle. You're basically looking at the highs that you stretched back into September of last year. Obviously, a clear-cut pivot break back in December. Support last month. Break got you the accelerated move. Has been resistance. Is resistance. You also got the 618 extension, or the 618 median line of the pitchfork right there. So the immediate focus for Aussie dollar is 73.28, 74.13. That's the level, the range we're looking for a confirmed break. Noting that if the downside breaks, initial targets are 72.08 and again 71.26. What do we do here? The premise as we started off the week was, man, we're at support, plain English. We're at support, end of conversation. If there's going to be a bounce, this is going to be the level to get it. If it breaks, it's probably going to be an accelerated drop. So we've been looking for inflection here, and I think we're getting the onset of that. So the initial bounce that we got into the open of the week stretched right into resistance, as we had noted, into 74.01, 74.13. Here's where we were back on Monday night. The rally came right here, and it's exactly what we failed. So once again, 74 guys into 73.28. That's our critical zone for Aussie. Noting that this whole setup, if this is a bear flag, this whole setup comes just above critical support. So if it breaks, expect accelerated drop. Until it does, there is possibility for a little bit of a recovery here. And what's a recovery in Aussie dollar? That's dollar weakness, as we've been calling for in the beginning of the week, with the dollar that stretched into resistance and pulled back, kind of jives well. So we've made an initial stretch here into resistance. We've failed, we've pulled back. The monthly and weekly open now comes in just a pip ahead of that 73.28 level. Further evidence, major critical support here on Aussie. Now, if we break to the upside, topside level, 74.53, 75. This is a level if we got to, I would do something if you're holding on the long side, be shaving that position off, bringing stops to break even or better. If you want to leave a little bit on there, if this is just corrective, guys, and the broader trade is lower, that's 2 equal legs off the low. So I would do something here if you're holding along. But the broader story is both of these levels for me are sort of interest levels if we do get up here for possible exhaustion, possible entries for the move lower. Aussie's at big support. Questions on Aussie dollar? You're free of Aussie data of any credence basically to the end of the week. So watch the US dollar price action here. Failed to break that 38.2 of the July range again. Kiwi 618 as well. 38.2 of the July range. So you're basically looking at this. Yeah. Guess what? 74. Love it, Jay. Love it. It's the same level that we were looking at with the swing high from September of last year. Beautiful. All the more. Right? Not bad. Not bad. All right, so that's Aussie. I don't, you know what, Jay, since you mentioned it, brother, let's just take a quick look at Kiwi. Here, this will be number 5. I don't really like the levels, and I haven't given you guys an update recently, but here was our last update. Where's New Zealand dollar? It's been quite some time. Here we go. So our last update on Kiwi looked like this. We were attempting a break of this critical support structure, lateral support. We were still in this downtrend, and then we did something radical. We broke above the downtrend resistance, and we did nothing. Nothing. I hate when the technicals react like this. It really reduces the amount of confidence we have on the technical configuration, and that's exactly what's been happening here. So here's what the intraday chart looks like. I'll zoom into the daily in a moment. Here's the 240 just to zoom out a little bit. Here was that downtrend that we were looking at last week. It was so clean until this happened. What the heck is that? And then pop through and then back in. Darn it. Well, then support held again, break back out of the slope, and then back down again. So like, you kind of want this. You wanted this break of this median line or this upper parallel to be a breakout, a true breakout. So I don't like where the positioning is. That said, Jay, I have the 38.2. Oh, you're looking at the July range also. That's a really tight one from here. $618 is just a bit higher near 70.27. Yeah. Haven't been able to make a crack there either. No, you're right. Right on the 618. Right on the 618. Let's get rid of these. Hold on one sec. Good eye. Good eye, Jay. I'm not a big. Well, let me take a step back. I don't traditionally look to specifically target monthly Fibonacci retracements. There's nothing wrong with that. It's just not something I usually do unless the monthly range is an encompassing range, means it covers the previous month's range or it's inside the previous month's range. That said, I do like that you're seeing basic objective lateral resistance here. So I think that retracement holds merit. I like that one. Yeah, just in case, Jay. I'm with you. I'm with you. Obviously, that capped the advance last week. Obviously, it's capping the advance right here, a near-term target, right? The question for me is still this key support. It's the same thing as Aussie, only Aussie is giving you a little bit more lift off that support. So if this is a break of downtrend resistance, we should be looking for some lift off here before inevitably resuming. I'm just not a big fan of it, Jay. I'm not gonna lie to you. If you put a pistol to my head, I would think again, you'd probably go for a spike of 77, if not, just a median line, and then you kind of dump and look to reassess there. But it looks like it could be making a little bit of a bottoming here for a near-term recovery before we start to resume. All in all, last month's opening range is still preserved. You got one false break there on the 20th, but the range is still preserved right above the June lows. So again, for me, the whole purpose of this trade is always focused above 69.30. That's been like our line in the sand for the last 2 months. Does that make sense, Jay? Does that help? Broader bearish inval is still 70.90, but as it stands right now, you are just setting up a real tight weekly, monthly at this point opening range right above support. So we'll want to see some breakout there. Looking for clarity on Kiwi. Loved it last month. I mean, not even last month. It was June. Last month was a chop fest, right? Looking for clarity here. Looking for clarity here. I think we get it. Keep in mind, later tonight, New Zealand employment numbers. Unemployment rates expected to fall to 4.5% from 4.7. All right, that is Aussie and Kiwi, numero 4 and 5. Here is number 6, the gold trade. So wanted to give you an update, guys, on this one last night as well. Really interesting on the positioning. As I said, I don't have too much conviction on this newly added descending slope, but I think it's something we should be paying attention to. Again, a reminder that on the gold chart, well, first gold from the weekly, ain't nothing to update here. We're just sitting on broader uptrend support. We're in mid-range for the July calendar month. So weekly chart has absolutely nothing here for conviction. Don't take my word for it. Look at momentum. What's less convicting than a momentum 50 print? I don't know. So Momo has died. The weekly chart are continuing to show real tight range right above uptrend support. Key resistance, 1853. You got the 52-week moving average ahead of that. You got the high week close for the year right there. And you got the 618 of the drop from the highs we made in May. That's your key resistance, period. End of conversation. Gold on a daily chart looks like this. So it's pretty, clean as far as the levels are going, but it's the Momo that's got us trapped. Again, 1833 resistance, support here at the 100-day moving average, the lower parallel. You're looking at basically the 1800 level. Need a break below 1795 to get the resumptive move. Again, that's the swing lows that we got mid-month last month. So my game plan, or at least my base case scenario here, guys, and what I've been talking to you guys about is if the wave count rendition is accurate, and this is a 1, 2, 3, 4, 5, and we're looking for this advance to be corrected, we would need a 1, 2, 3. And that's why for the last couple of weeks, or last couple of days, I should say, I've just been looking for a new high to register. Just a new high to satisfy that wave count. Now, we didn't get it, okay? Turned literally pips, just cents ahead of the highs. So where do we go from here? Nothing changes. Nothing changes. Support 1800, resistance 1833, 1841, still an area of which if we spike into, you could see failure. That would satisfy the corrective move and then the spill lower. Anything northbound at 1841, I think you see that shot to complete a larger scale correction. But that's not sort of the focus right now. Key support into 18, bullish inval 1795, topside resistance 1833, 1841. Momentum on the daily chart, 50. I mean, you can't make this stuff up. Do the near-term charts look any better? Well, they actually kind of do. Again, I'll bring this into the 120. Here's the slope we added yesterday. You haven't gotten much of a conviction turn off it yet, so I still don't want to kind of run with that. But it highlights, once again, the 618 would be our near-term sort of line in the sand. If we break above that, you're likely to see the continuation. The 618 of the near-term rally has continued to offer support. That was 1806. We talked about that yesterday. Here it is again. Here's 1795. That's the near-term bullish inval. So let the range play out. You have FOMC on tap, or excuse me, you have non-farm payrolls on tap. Could give this thing the sort of jerk that we need to get the move. But all things held constant, I still think the risk is for that sort of corrective high to register before any ultimate larger move is underway. Again, broadly speaking, longer term, I am bullish gold. I fear that we still have one more completion of a technical correction here before resumption. So it's quite a compelling move. Again, if the dollar pullback, as we've been looking at on some of the crosses, does materialize, that does support the case fact to get another blow towards the high here in gold. But it's pretty big resistance. So wouldn't be looking for too much of a spout. I'm more looking for a blow off high. So let's see how this pans out over the next couple of days. Questions on gold. So silver is in a similar scenario in that it kind of made a dump into some big support, probed well below it last week, recovered back above to close the week there. And here's the recovery, a similar scenario. 1, 2, 3, 4, 5. So we should be looking for a 1, 2, 3 type of trade for a corrective move before the resumption. I don't know. Here's what it looks like on the intraday chart. And the levels look pretty good. As I said early in the week, or actually I updated you on this, I think last night, 2 levels of interest that we're looking for silver on the downside, a 24.13, all right, and then that key zone of support into 24.94, 24.97. If we were to get down here, both interest levels, to see if we can't get that last pump towards 26. July open, a 38.2. You got slope up there. Again, if the wave rendition is proper, 1, 2, 3, you need that 4, truncated 4. One more high is what I'm looking for. So we'll see if we can't get that here in silver on this bounce off the 38.2. I don't know if we get down there, but both of these levels are the ones we were looking for possible inflection, bullish invalidation. Bullish invalidation. Topside resistance level, don't forget 25.74. That's still the opening range low from last month. Has obviously been resistance. Slope is there. Beyond that break, you're looking for, again, 26, 26.10 is a basic 38.2. So some conflicting price action here on Aussie, excuse me, I keep saying Aussie, on gold and silver. Both risking a little bit of an exhaustion pump here as they try to correct. All right, last but not least from the com block is oil. And this one has been back, oh wow, it kind of tanked already. That was pretty quick. So here was the last update on oil, was on the 25th. And the major focus here was on that correction. Remember that bounce that we got off support, guys, was pretty huge. Oops, we talked about that for quite some time. Here's what it looked like. Key support on crude prices on the weekly chart. Key support. Massive bounce. Look where it failed. Median line resistance. Excuse me, median line break. Saw a huge dump. Rally failed at median line resistance. And here we are again. So that's the weekly chart, right? Just to show you where we are. Coming off of uptrend resistance. Daily chart looks like this. That recovery off of key support failed key resistance. Remember this? The high we closed for 2018, 24.26 into 74.26 into 74.91. You got the 786 retracement there of the decline off the highs from last month. You have the monthly open. Again, the median line that we just looked at on the weekly chart. Perfect tag, and yesterday, nice reversal. Now we got hung up on the 38.2. The momentum looked exceedingly bearish, and we were looking for a larger correction here. So what I had mapped out, what I wanted to show you guys today, which is kind of just played out right before the webinar here, was right here. 2 levels of interest to look for. Obviously, we just broke 70.71. Here we are at the 50 basic slope. This is just a parallel. This is just a parallel off the highs, mirrored to the lows. We're there again. Okay, so 2 levels of interest, 69, 64, and 68.56 would complete a 618 of the decline. So you can envision a scenario, maybe you get some kickback here, one last drop, and look to reassert that. At the end of the day, you need a break above today's high to even shift the focus back toward that 74.40 level. So very interesting levels. Again, I think really clean on the ascent. I do think this ultimately will prove corrective. So I'm not looking for much lower. In fact, let me just see what an extension looks like here. Oh, wow. Look at that. My favorite Fibonacci confluences, guys. 100 off the high. 618 off the low. Gives you 68.25 to 68.56. That converges on this near-term downslope. Looking for a larger reaction there if we get it in crude. Pretty important. Any questions on crude? All right. Well, look, last but not least, as I said, I'm not a big fan of it, but I did want to just take a moment to go over the sterling levels because the BOE is on tap on Thursday. Now, let me take you back to the weekly charts first. So here's sterling on the longer term. Where we failed last week was just a hair under what I was looking for, 140. I saw Jamie tweeted to you guys, yeah, okay, I got you on Bitcoin for sure. No, we haven't covered it. I got you. I'll show you in a second. The level that Jamie tweeted was 140. I'm looking at 139.97, 139.92. What's 5 pips between friends? But it's a big resistance zone. It's a big resistance zone. Wholly, in and of itself, it is the 618 retracement from the decline off the early high. Add to that, it's the 2018 high week reversal close. And over the next week, it converges on downslope resistance. So there's a lot to look at here. This is sort of the big ceiling for sterling. And the near-term structure broke, but the longer term hadn't. So this is what keeps me on the sidelines here. Here's the daily chart. It's the same daily chart we've been showing you on our last sterling update, which was right here. Right, so here's the daily chart. We were looking at this confluence region right here. It was last month's opening range high, basic trendline resistance in red, and 200, or is that the 100-day moving average, all right there. So I was looking for a reaction. Well, we got it. It popped through, and again, failed just ahead of that 39.97 level before pulling back. What do you do here? Is that the high, and we've just failed, and that was sort of a false break of last month's high, and it's failure from here? Or was that an objective break of last month's high, and this is just a setback? We're looking for the resumptive move. Which one is it? Well, I'm inclined to think something like this. Here's the intraday. So that slope, let me zoom this out to the 240. That slope that we were following for quite some time, right off the highs, just kind of a modified slope right off this gradient. Caught the low. Here's the bounce, breakout. Are we holding slope resistance as support now? If it's going to strike 39.90, okay, here's the bigger slope. I don't have it on the intraday chart for clarity, but just to put things in perspective of what that 618 is governing, you can envision a scenario where you're still going to make a strike of that, and that's where we look for the larger reaction, right? A breakout above 140 essentially would be nullification, invalidation of the yearly downtrend. If we fail here, it's downtrend resistance. That could be a really good launching point for a larger move down towards 37.40 again. So for sterling, guys, I'm on the sidelines. I want to see what the BOE is going to do if it does do anything on Thursday. Base case scenario is that the advance is still at risk while below 139.90, 140. And that's the only play for me here. It's either going to be a failure into the 140 level, or if it ruptures, a pullback near that level to get in long to stretch towards 41.50. I don't really have anything to do here. Questions on sterling? Big resistance into 140. We posted it. It wasn't, I spoke wrong yesterday. It wasn't a true outside day reversal. Oh, I stand corrected. No, it was. It was a proper outside day reversal last Friday. So I'm still inclined to think, either that's the exhaustion or we have one more exhaustion to go, but I'm still inclined to think you get the drawback first. All right. K, Bitcoin. Here's what it looks like, brother. So we're seeing a little bit of a failure at resistance, and the resistance level that we talked about yesterday is kind of the same one I'm focused on now. 41,929, 42,464. Fibonacci confluence there of still valid levels govern the high. Too clean on a 10-day rally. Boom, faltered right there and pulled back. At this point, I'm willing to clear out sort of the June high day close. Don't mind that. I'll leave the January high day close as just a decent pivot in price still. But even if we were to correct just a 38.2, it would still call for a move towards 3750, 37,527. Almost struck that right here. Put a gun to my head, Kay. I would say that you probably have made a more significant low here near term. Remember, for the last 3 months, the levels of which I've been telling you guys look for possible entries were 29,000 and 27,773. Both of these. This turned right ahead of our first level. And here's the shot. If a low is in place, losses should be governed by 34,000 maximum, 34,300. So big resistance, K. I think you could possibly slump down a little lower. If that low is a more significant low and this thing has turned, that should be your max drawback. Here's what it looks like on the intraday. So just to add that retracement real quick. Puts the July open, last month's open on that 618. That's kind of your near-term bullish inval. The whole question is, how deep does the correction get? Truth be told, key support on the near term is right here. So let's see what kind. Let me just clean this up for you. Give me 1 sec. That's the July open. It's the June range. Don't need that anymore. That's null and void. Bearish invalidation. Take a snapshot of that, Kay. I'll give you guys an update on these levels in the intraday report, but that's what I'd be looking at right now. Kay says, got it. Right on. Right on. Yeah, I think a more significant low for the medium term has been in place. The question is, how deep do you get on this pullback to get proper reentry? You were getting crazy divergence into the highs, like radical divergence, right? So I love the pullback. Is this the extent of it? Could be. I'd rather see this thing get one more draw lower before we start to move on. But at the end of the day, if you clear 42,000 on the upside, it's going to likely be a pretty significant breakout. So stand clear there. All right, that's everything on my list, guys. Let me know if you have any other question or trade setups you want to review. Again, I know you don't like it, but can I ask you for dollar yen? Jay, of course you can, brother. I'm always just joking around. The abomination in view, sir. Here's what dollar yen looks like. Never be timid to ask about an asset. We'll look at anything here. So we did break the 2019 open again. This is the fourth, count it, excuse me, fifth weekly break below this level. 4 of them failed to close. And that's been my problem with dollar yen. It's been pulling this abominatory move on me over and over and over again. We've been talking about 109.68 for weeks. And every time it looked like it was breaking there, looked legit, quick reversal, quick reversal. Every week closed back above. In fact, if you look at this on a line chart, this looks like it's the first attempt to break that level. It's not. It's not, guys. This is the fifth consecutive time. Now it looks, obviously it's the deepest dive, so it looks legit. So at this point, a basic retracement off the yearly low puts into focus the 38.2, okay, which comes in right around 108.20, something like that. Yeah, right here, 108.20, right? Objective stuff, not Mike Boutros' opinion. These are just mapped out levels. Now we can dig down even deeper and look at the extension of the 1, 2, 3 here. Here's your high. Whoop, let's fix that. Here's your high. Here's your low. Here's your high. Now look where the 100 comes in. 107.99. Good deal. This is the 2017 low day close. Guess what? Critical support for dollar yen on the weekly chart now rests here. 107.83 into 108.20. Huge. Huge. Okay, that's the weekly chart, Jay. So here's what it looks like on the daily chart. Woof. How did I not look at this? Yeah, Jay, we're at big support, man. If this break materializes here, 109.07, there's that 108.62 level. That's the objective yearly open from last year. And the 32 is 109, 108.19. Yep. Yep. Here's what it looks like. This is null and void. Let's take this out. Let's take this out. Here's what the intraday chart looks like. It's the 4 hour. Here's the 2 hour. Maybe something like this could be in play. Now bear with me. I know this is messy. Let me just clean this up for you. Key support. Watch for something like this in dollar yen. Okay, now, so look, it gapped into the open. So technically, some platforms will show the weekly open is here. Technically, some platforms will show the weekly open is here. So either way, they're both levels we're watching. Initial resistance right now, if this crack is legit, that's right the June open, or the June low, excuse me. Bearish invalidation for the dollar yen drop. Downside levels 108.62. It's the objective yearly open. Again, fact 108 is the next major drop zone. So this is quite interesting. And again, let me bring over that. It's 100%, so I can actually scratch this one. Yep. Two equal legs off the high gives you 107.94. That's too crazy. That's too crazy. So even if it's just a corrective pullback, that's sort of your objective level. Bottom line, Jay, look for inflection here right now into the US Open. If we break and buckle below the median line, I think you're still on track for 108.62 and 108. Near-term resistance, 109.56, 109.68, bearish invalidation. Technically, the bearish invalidation should be at the weekly opening range high, but with a drop like this, I'm comfortable putting it at that 109.68 level. Jay, does that help? Thanks for asking. Dollar yen, wow. I don't know how this fell under my radar today, but interesting moves here. Typically a strong reactor to US data. So specifically as we get into the close of the week and non-farm payroll reports, this one's going to be paramount. Keep an eye on this definitely as we head into Friday. Jay says, clear, thanks. Say you're more than welcome. Okay, guys, we'll wrap it up here then. If there are no other questions, stay nimble, okay? We'll get you an update. We'll be back together again on Thursday morning. So right before non-farm payrolls, we'll take another look at what the dollar is doing. Keep in mind, guys, we are just setting up the initial monthly opening range and the initial weekly opening ranges. So if you've got some FOMO, or if you don't have any positioning and it's kind of killing you, sit tight. We're going to get a lot of volatility. I think there's a lot of different setups that are playing up specifically with the macroeconomic backdrop here. We could be getting, looks like they're about to push through um, the bill for infrastructure. So that's one thing. Again, further flush, further more money into the economy. So there's a lot of different dynamics at play. So keep it nimble as we open up the monthly opening ranges, and I will see you on Thursday morning to give you guys an update right ahead of non-farm payrolls. Best of luck trading, guys. See you then. Cheers.